SN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
And welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. You might even be watching us now on our YouTube channel. And any like, subscribe, share is greatly, greatly appreciated. We're talking about gold, but who isn't talking about gold and silver now? We've got near $30 silver. We've got back to $2,000 gold. And is it just a fluke? Is this a flash in the pan? Or is this a continued trend where we're going to see even higher, greatly higher gold and silver prices? You know where my beliefs rest, but let's find out from the ultimate insider, one of the largest bullion dealers in the country, the only state licensed and bonded precious metals dealer in the country, because he's in Minnesota and that's what they require. And we'd like to know your comments, your beliefs. Gold and silver going higher still? Email us, kl@kerrylutz.com. Well, Andy, so what has been happening at Miles Franklin these days?
Kerry, it's good to see you, buddy. Really pure insanity. I've done this for 30 years, and nothing I've ever done has really prepared me for what we're seeing right now. You know, when we take a look at the backdrop, when I started in this industry, Kerry, you could buy U.S. Treasuries at a 9% coupon. And with interest rates where they are right now and the volatility in the stock market, people are bypassing the safety of the bond market where they would normally go when things got a little hairy. And they're coming here into a precious metals market that has experienced a disruption in the supply chain. If we go back to the beginning of the year, 60 to 65% of all the mines across the globe were shut down. The refineries in Europe, most of which are in Switzerland, all border Italy, they were shut down. And all of the mints here in North America, US and Canada in particular, suffered shutdowns. In fact, the US Mint just the other day came out and said, well, we're only going to make gold or silver each month, not both, because of social distancing, so we'll have to make that determination. The Canadian Mint is kind of doing the same thing too. So you put it all together. You got a gummed up supply chain. You have way more demand than ever. In fact, people that normally would look for safety in the bond market come right here. So we have more demand in a gummed up supply chain. And it's really created anxiety. It's created volatility. It's created higher premiums. And it's created an environment in retail precious metals that I never thought I'd see, where we are roughly 8 times what we normally do. We've done 4 years worth of business in the first 6 months. And that is over 2,500 new clients since the beginning of the year. Normally that would take 2, 3, 4 years. It's an environment, Kerry, that is kind of akin to getting toilet paper and bottled water in March at Costco. It's unlike anything I've ever seen.
It's funny that you mention toilet paper and bottled water, because I'm a bulk buyer. And so it never even entered into my mind to go out first thing. They shut down the global economy and I'm worrying about toilet paper. But it did cross my mind to be buying some silver up. I've been buying little odds and ends, kind of itchy stuff on eBay, like for the past 6 months at prices that went way down. And then after March 23rd, you know, the premiums were, forget about it. They were out of this world. And I kind of stepped aside, and I've been getting coupons and stuff. And, you know, you can't buy anything volume there for a great price, but the little odds and ends stuff. But it's just been funny to watch the same stuff. These people are overcharging for it and they can't sell it at a lower price. And then as the price of silver goes up, they keep raising the price to keep their margin where it is, and they still can't sell the stuff. So I know, based on what I'm watching on eBay, that something is happening.
Well, if you use that March 23rd, or actually March 17th, I think is the actual date where it all changed. You got the federal indictments levied against JP Morgan right around that time, where the federal government issued 6 racketeering charges, federal indictments against 6 of the JP Morgan traders. And those indictments that were levied against the JP Morgan traders, to me, has changed the landscape in a very large way. In fact, it's almost startling to see how the price has gone straight up, really, in both gold and silver. Silver's nearly tripled since then. It was $11 and change, and 2.5 times. And gold is up, I don't know, 40, 50% since then, if not higher. I think when you pull JP Morgan out of the short game, the way that it appears that they have been pulled out of the short game. In fact, they're actually net long in futures for the first time since 2008 for the last 12 plus years. They're long. It's a whole new ball game as it pertains to silver, at least, and the way that it has been held down on the Comex market so voraciously by JP Morgan for a long time. And, I feel vindicated. I gave speeches and presentations for years talking about the manipulation of JP Morgan manipulating the market. And I got a lot of heat for that. People said, ranging from Doug Casey saying, well, there's no way that could be true, that the traders couldn't keep their mouth shut, to other people saying, well, why would you talk about something that would just turn people off? Well, the bottom line is the price was manipulated for a reason. And the fact that they have been indicted now, 6 of their traders that in an ongoing investigation who have turned state evidence, who are cooperating with investigators, gives hope, I think, to a semblance anyway of a free market. And you're beginning to see at least what a freer market looks like as it moves up and catches up for lost time and uncoils that coiled spring. So, Kerry, I don't think you've seen anything yet. And I think that where we are right now is in the center of the hurricane. Coming from a guy who lives in Florida, you can understand that. The trailing edge of the storm, I don't think, is too far behind. And it culminates, this fall with ending with the election. And God only knows where we go from there.
Yeah, we're in uncharted territory for sure. And, one thing that's happened is the Comex used to be just a hedging market where players, you do it yourself. If you're selling metal, you're buying metal, you're fabricating it, you're manufacturing jewelry, anything. If you have any involvement in the space, you absolutely have to hedge, because if you don't, you'll be bankrupt within a month, almost certainly. Correct. Unless you have a sense of price and market that is uncanny, you'll be out of business. So everybody has to hedge. So the hedge is done based on very little metal being present in the Comex, because nobody's taken delivery. Now, in the past couple of months, the Comex has become a delivery market. According to Craig Hemke, they're delivering record amounts of metal. And the only people who can afford to take, 1,000-ounce bar of gold, good for delivery bar, are the big guys, because the little people aren't buying $2 million bars of gold.
You're looking at, it's very often in the other category on the Commitment of Traders report, which would be the family offices and the high net worth individuals and some of the funds. So you have the in the know people. That's kind of like you play poker with a guy, and every time you play poker with him, he goes all in all the time, and he's full of crap most of the time, but you're afraid to call him and risk your whole stack. Well, it's as if the family offices and the high net worth individuals have called the bluff of the commercial banks. And to be naked short in this environment is catastrophic potentially. And for your listeners who don't quite understand the hedging premise, let's say this phone right here is 1,000 ounces of gold and it's in my vault. Here's my vault, my left hand. If I don't hedge the other side of that trade, I am widely open to market volatility. So if I have 1,000 in my vault, I'll sell 1,000 ounces on Comex. If the price, like last week when the price of gold fell by $100, I'm down $100,000 if it not for this hedge right here, which sells short the exact same number of ounces at the same time and moves up commensurate as this falls down. I'm always market neutral. We make our spread on transactions. We don't speculate our inventory. And you're right, for someone like myself, that is a legitimate hedge, or a farmer who produces who plants his field in April might want to forward sell his production into the end of the year to remove market volatility. There are uses for the Comex market, but the commercial banks that have been suppressing the price to wickedly accumulate, like JP Morgan, over 1 billion ounces of silver, 10 times what the Hunt brothers tried to do, the largest physical position the world has ever seen, while holding down the paper price as the single largest concentrated short position in the history of the Comex. That's the tail wagging the dog. And if that ends, like it appears it may have, why then the prospect of a freely traded market becomes at least a more hopeful premise. And it appears as though the market is trading on more of a freer basis, albeit there's still manipulations. There's still several commercial banks that are short. But if I had to guess, what we saw last week in a $4 drop in silver and a $100 drop in gold was the commercial banks trying to get long. They're so far short down at those lower levels, they smash the price down and try to cover a good portion of those short positions. And you see, here we are today, right back to where we were before it was drubbed. So it was a drive-by shooting and didn't change the fundamentals at all, really.
No, and hey, let's go back to the good old days of when Bear Stearns ceased to exist. They were the ones holding the silver short position, and it got so underwater that they were forced to dissolve, among other reasons, and hand it off to JP Morgan. And JP Morgan's been responsible ever since. Now, from your standpoint, from Miles Franklin, because I know I've talked to many of you out there, it's become very tight and hard to get metal. Do you have silver, particularly, Andy, available?
Not only do I have silver, Kerry, I will be the lowest price in the country for your listeners. If they send me an email with the Financial Survival Network or Kerry Lutz in the title bar, I will make sure that your listeners are afforded the lowest price on any product in the country. And we do have product in stock. We have a good selection of product. I owe a debt of gratitude, as I've said on most of these podcasts I've been doing, to Chris Martinson of peakprosperity.com, who alerted me in December to whether or not we want it. Let's just not even politicize or talk about COVID, but let's talk about the reaction to it and what it really has meant to the economy. And so he alerted me to this. And so I got ahead of this in December, January, February. I'm getting ahead of it now. I have gone deep into my line of credit. I have told my operations department to buy everything and anything that's not nailed down, and I don't care what it costs. The premiums are high, and every time I sell out a product and I need to go buy more from one of the distributors, I pay more. And I can't hedge that, but I am that confident that the trailing edge of the storm is coming, just like the front edge of the storm came in March and January. I'm loaded for bear, and I will have as good of a selection as anyone in the country, and I'll beat any price in the country from any of the nationally publicized retailers. But you're going to pay higher premiums than you ever have, and I'll caution people who are waiting for a pullback. That's not smart. Because in March, when gold and silver got smashed, silver was down to 1180, the lowest point, right before the indictments came out. You wouldn't find a silver coin for under 20 bucks. The premiums rise commensurately with the drop in silver because you're looking at many people out there looking for the pullback, jump in to accumulate the metal in a very distorted and fractured supply chain. So oftentimes what happens is there's a very small window when the price drops. You have to jump quickly, or else everyone who's looking for that bargain jumps on board and the premiums go to the moon. It's just a situation right now where there's not enough supply and there is a voracious demand. We never had the mainstream participation, Kerry, never. All of those very wealthy people would go to the bond market. They are coming here now. And you know, we've done north almost $700 million, over $700 million in sales. And that's 4 years worth of business in 4 good years. So that is, and this is in 7 months. So this is kind of the reality.
We're just getting started.
Yes. And so, you know, that's something every business owner has dreamed of. And I'm very appreciative of it. It's also kind of startling and concerning because, you know, it's a challenge to get product. It's becoming more difficult. And with all of this new interest at a period of time when the supply chain is not getting better and the US and the Canadian Mint are working basically at half capacity, we're one event away from literally there being no product, irrespective of price.
Wow, that's amazing. And well, you know, you went through a lot of lean years here, Andy. You know, with the exception of 2016, from 2011, end of 2011 onward, the prices did nothing pretty much but go down.
Right.
And interest, that's really the key. Interest was down, but now all that's changed. And I can only imagine what's going to happen here next. So people want to contact you, see about buying metal. The best way to reach you these days, Andy?
Email at andy@milesfranklin.com. I will either reply myself or forward it on to one of my senior brokers. I am getting 300 to 400 emails a day, every day, 7 days a week. So have patience. I'll try to get to you within just a few minutes, few hours, or one of my brokers, and put Kerry Lutz or the Financial Survival Network in the title bar, and I will promise and guarantee the lowest price in the industry for your listeners.
All right, we appreciate that. So the email address is andy@miles, just like it sounds, franklin.com. Email him today. He will get you the lowest possible price that is available in the market. Let's face it, you know, it's difficult to discount a product like gold and silver because basically you're selling money. Might not use it as money at this point, but Andy, just curiosity, what are the premiums running on silver and gold these days?
Silver, you're going to be anywhere from $3 to $7 over. $7.75 on Silver Eagles puts me lower than anyone in the country, I think. And on the low end, even a 100-ounce bar is going to be north of $3, as are 1-ounce rounds. These are very unusual times, Kerry, and I've, you know, to me, that's the rising premiums really are the scary thing. That is the supply is not being able to keep up with demand, and so I think the premiums will only go higher. On gold, they're not as off the charts as they are of silver. Gold, you'll be somewhere between 4 and 7% over on gold, which is maybe 2-3% more than what it normally is. No, it's not. It's silver is the tough one, and it's becoming harder and harder and harder to get. And I think it'll only accentuate, being that the majority of the silver that I've had to offer all year long, a lot of it has come from the Perth Mint and the United Kingdom Mint, Austrian Mint. Well, all of these mints are across the Atlantic Ocean, and all of them are dealing with COVID in their own way also. So, you know, you have the possible disruption of supply chain. And when the US Mint has said, well, we're only going to, for the next 18 months, make gold 1 month, silver the next, we'll make a determination. And the Canadian Mint is pretty much doing the same thing. It tells you that the North American supply chain is way, way busted. And so buying Silver Eagles at $7.75 is ridiculous. Buying Silver Maple Leafs at $5.25 or $5.50 over is ridiculous, with delivery delays to boot. Now, I do have Silver Eagles in stock. I do have Australian Kangaroos in stock. I have bags of junk silver. I have a lot of stuff in stock. But when I sell out, I have to pay more, and I have to wait an unspecified period of time. So that's why I think waiting for a pullback is somewhat of a fool's errand right now. Not only has it proven to come with higher premiums, there are no guarantees in delivery. In my opinion, a bird, you know, a bird in hand is, you know, worth a couple ounces of silver in the bush. And I think, I mean that dead serious. In March, one last thing about March, I had, between the US and the Canadian Mint, over 70,000 ounces owed to me that I had paid for when they both shut down. And I had no idea when I would get it. Nor was there any indication or guidance as when they were going to open back up. So even though I paid for it, and even though in normal times I'd have it in my vault a week after I sent that wire, it turned out to be weeks or months before I got the product. So I think timing is important, but so is getting it while it's available, and buying stuff in stock is really big too.
One other thing, we did a webcast, I think it was about 2 years ago, and we talked about anomalies in the precious metals markets. one of which,
Numismatics.
right? Remember that? And
Yes, I do.
remember that one of the things we talked about was the fact, numismatic gold coins were trading at less premium than bullion coins.
I was begging people.
Yeah, I remember, and I should have done it. Number two was that junk silver had virtually no premium. Pre-1965 coins, there was no premium. Zero.
No, and now there's about a $3,000 premium per bag. And I'd like to just give you a cost. An MS62 $20 Liberty today is going to cost you somewhere around $2,400. When I was begging people to do it, they were less than gold eagles. Anomalies are very important to understand. That's like your background right there, the ocean and the palm trees. If you woke up to that environment with 4 feet of snow, that's an anomaly. And that's the same type of an anomaly that we're seeing right now, or have seen for a long time, in palladium versus platinum, in silver.
I was just going to say that. Gold.
Yeah, so there are still anomalies that are being exploited. Right now, that anomaly in numismatics arguably is gone. The anomaly in silver that was 125 to 1 or in that neighborhood between it and gold has now shaved off almost 50% since March. It was an anomaly. We were begging people, buy silver, and now it's around 70 to 1. It's still in a good value to switch gold to silver, but not like it was. When you see price anomalies, you take advantage of them, period. And every time I've ever done that in 30 years, it comes out ahead, because anomalies are there for the law of averages. Mathematics is a very strong indicator. And if you get that far away, the further away you get from long-term established trends, i.e. 4 feet of snow in the ocean there, the greater the likelihood that the magneticism pulls you back to the mean, that the weather warms up and the snow disappears, that the ratios come closer together back into line with where they've normally been. And I would like to mention one thing, follow up on that silver to gold ratio. In geology, for thousands of years, silver's been 15.5 times more abundant than gold. Keith Newmeyer will tell you, who runs First Majestic, that what's coming out of the ground right now is closer to 6 to 1. So at 70 to 1, you're still somewhat of an anomaly, not historically, because the historical relationship over the last 150 years has been about 45 to 1. But you are still in that zone where you could comfortably trade gold into silver and expect somewhere down the road to trade back to gold and maybe even double what you started with. Because in 2010, we had 80 to 1, and by 2011, we had 37 to 1 with $50 silver and 1915 gold. So the chances of doubling your gold right now by trading to silver and then back to gold, when we see a 30 to 1 ratio, bearing in mind that it's 6 to 1 coming out of the ground now, yeah, these are still realistic anomalies, not like they were at the beginning of the year, but still worthy of exploiting, in my opinion.
And especially platinum. To me, platinum is the trade coming up here, because platinum historically always traded at a premium to gold. And for the past 2+ years, we've seen platinum sink lower and lower and lower. And in my opinion, Andy, and I don't want to keep you because I know you are super busy, but in my opinion, these anomalies have all remedied themselves. The biggest glaring one, though, is platinum trading at years low. And then they say, well, platinum's an industrial metal and diesel cars are going out. But we're in the process of a rediscovery, a generational rediscovery of precious metals purchasing. I don't want to call it investing, because look, you buy precious metals to retain the value of your savings. You don't buy it per se to actually turn a profit, although if you do, that's great, because these things, once they get going, can give you enormous returns. But platinum has been left out. Your average millennial doesn't even know what platinum is, and platinum is just sitting there waiting for the taking here, Andy.
Yeah, it is. It is. And I would agree with you. I just did buy 100 2020 platinum maple leafs today, and I'll have those cheaper than anyone in the country. But you're right. That is a real anomaly. And much like silver, I think the mistake to be made is focusing on an industrial aspect of it, when the monetary side will exert itself, I think, before too long. as the dollar really runs into trouble. And I think you'll see platinum viewed also as a monetary metal. The industrial side could hurt it and maybe would hurt it temporarily, but the ratio is so far out of whack that I throw all that out the window. Platinum is as good of a buy as there is. You're right. I do agree with you. And it's interesting, those anomalies have started to work themselves out. The numismatic one did. The silver one is on its way to it. Platinum, especially if you own palladium, trading it to platinum is the wisest thing you can do, because most of my career, 1 ounce of platinum was worth 3 ounces of palladium. Right now, 1 ounce of platinum or 1 ounce of palladium is worth, almost 3 ounces of platinum. It's inverted. So there still is a good value there play. And if you own palladium, now's the time to switch that to platinum, 100%.
All right. So we started some new ratios here, Andy. Number one is the Tesla to gold ratio. How many shares of Tesla does it take to buy an ounce of gold? Number two is the Tesla to silver ratio. And then we're also have started a Bitcoin to gold ratio, because Bitcoin, I don't know where it's going. I think because there's nothing tangible there, it's going to be very hard to track where it's going to go. But if there's a panic, then it could go well up. And then I think I've got a new product in my hand here that I think you should consider selling. Can you see that?
What is that?
That is a silver bullet.
Oh, yes, I can see. I do have those. I have some of those.
Silver bullets?
Yes, as a matter of fact, I do.
It works really good for vampires.
Except there's no gunpowder in it.
Yeah, well, you have to throw it at them, I guess. So we got silver bullets. All right, yeah, that's cool. I bought it a couple of weeks ago on eBay for $20-something. And now I'm sure it's worth 35. But hey, I made $10, and it's just been sitting on my desk here, me staring at them, thinking I'm going to make it into jewelry, though. But in any event, all right, milesfranklin.com, Andy at milesfranklin.com. Email him now. Don't wait around for this. I mean, look, I didn't tell you for the past 8-10 years to buy gold because I thought it was going to go up. Said buy it as an insurance policy for government stupidity and abuse of the economic system. That's the only reason I ever told you to do that. Mining stocks, different story. They've been going gangbusters. All of our sponsor companies are performing incredibly, Andy. But as an insurance policy, you're buying insurance in hopes you never have to use it. You know, you buy auto insurance because some idiot might lunge out in front of your car because he's in a demonstration and he's a peaceful rioter, and you run him over. You're responsible, even though it's his fault.
You know, they're going to pull you out of a car and beat the shit out of you, just like they did to that poor couple in Oregon last night. So,
yeah, so
but,
sad.
But let me say this, and I've beaten this over the head for the last year, and I want your listeners to have this deep into their brain. The biggest development of my career, period, of 30 years happened last April. Not this, a year ago, April 2019. Let this sink in. Since 1944, the only tier one asset on the planet were US dollars and treasuries. That is, if you Google what a tier one asset is, it is a riskless asset. The Bank of International Settlements reclassified gold last April as a tier one asset, the only other tier one asset on the planet. So for 80 years nearly, it was just dollars and treasuries. And now quietly, they reclassified gold as the only other tier one asset on the planet. Now, of course, they front ran that decision in 2018 by accumulating more gold a year before they made the decision than they did as a group, the central banks, in the previous 60 years combined.
Agreed.
Those numbers continue unabated. The wealthiest, most influential, well-funded, well-informed traders on the globe have classified gold as a riskless asset and are gobbling the crap out of it. So that, more than anything, is all I need to know when it comes to why we should buy gold, because the future is very bright for it. The most influential traders on the globe have told us that by their actions and by their accumulations. So I don't think you've seen anything yet, Kerry, and I think you're doing a service to your listeners.
Well, that's what we're trying to do. And if gold is a tier one asset, then silver is clearly a tier 1A or 1B asset, because the connection between them. And of course, silver being the more volatile of the two. We're going to see, who knows where gold's going, but silver is going to go much further on a percentage gain. I've told you this for years, not saying this, just wasting my time here. A lot of you have written me and said you've bought gold and silver. And I don't want to say that this could be your last opportunity, but it's almost certainly your last opportunity at these prices. Imagine if gold were 4,000 an ounce and silver were several hundred. Your purchasing power, which is what money printing and inflation is all about, is going to go way, way down. And there's an inevitability to it, Andy. So we'll leave it at that. Just write Andy at milesfranklin.com. Go to the website. I personally am very hot on platinum. I don't own any now, Andy, but I'm going to be buying some shortly. I think it's so short-sighted not to buy it. The only thing that makes me a little nervous is investor knowledge. Everybody knows about gold and silver. They don't know about platinum and palladium, but I think that those days are coming to an end really shortly.
Well, that's the reason to do it. To be ahead of the curve and ahead of the crowd. And most of us go through life saying, damn it, I knew I should have done that.
Coulda, shoulda, woulda.
Kerry. Your gut is your best financial advisor, and you're tuned in more than most people. So trust your gut. I'll hook you up, make sure you get the best price in the country. I appreciate being here, Kerry. I do.
Anytime.
And for your listeners, reach out to me. I'll get back to you. And I wish you and all your listeners a wonderful day and good health, and stay well in these crazy, crazy times.
Hey, and like we said many years ago, Andy, when you buy, they ship. And that's something that you always got to be considering. We saw so many, I want to call them household names, but well-known, prominent bullion dealers bite the dust. And many of them had engaged in less than stellar ethical behavior, to put it charitably, i.e. scamming you. So just remember that the only company that is bonded and licensed in the country, for all I know, for the world, Andy, you might be you might be a gem in the world. I don't know if any other country really licenses this or bonds you or what.
Certainly not in the United States. We're the only ones around, and Minnesota, for being the epicenter of stupidity for the last 7 months, at least they have something redeeming in terms of protecting protecting the consumer as it pertains to precious metals. But I guess I'll leave it by simply saying this. What I saw here in Minnesota is something so surreal I never thought it would ever happen. There's an old saying here called Minnesota nice. And if someone drives off the road in January and you're driving by with no jacket and dress shoes on, you get out of the car and you help them pull themselves out of the ditch. That happens all over the place here. And what I saw here in Minnesota is just startling, but it opened my eyes to anything can happen now and to be prepared. And this is the calm before the storm. I hope your listeners do take you to heart and do listen to what you're saying. And if they do want to take us up on that, we'll make sure it's a good experience and the best price in the country. And in the meantime, just know that I'm here if you ever want to chat and see what's going on this side of the table. And I think we should do it again right before the election. Let's see how things are playing out.
Absolutely. All right, Andy, appreciate it. Any questions or comments, email me, kl@kerrylutz.com. Andy, we'll talk to you again real soon.
God bless, Kerry. Take care, brother.